Because obviously securitizing assets is a major topic in the space, and it doesn't get any better than Securitize. So we'll do a quick intro here. So Carlos Domingo is the co-founder and CEO of Securitize. He has 25 years of experience in innovation and digital transformation, including having also founded Spice VC, the first truly liquid, inclusive, and transparent tokenized VC on the blockchain. Previously, Carlos was the CEO of research and development of Telefonica. It's one of the biggest telecom companies in the world, as well as the CEO of new business and innovation for Telefonica Digital. Bradley Kimes is going to be moderating Carlos, and Bradley is a prominent crypto YouTuber and is known for his insightful analysis of thought-provoking discussions. Yeah, on the YouTube channel on the latest trends and developments of the world of digital assets. So without further ado, turn over to you, gentlemen.
Awesome. Thank you guys for being here. And let's give it up for Carlos Domingo. Just very quickly, I want to level set for people in the room so Carlos doesn't have to do it. The first fully digital securities issuance platform, Securitize, enables issuers to raise capital and allows investors to access alternative investment opportunities in a fast, transparent way, bringing the two together like never before. And we're talking about $600 million on chain, over 500,000 accounts and counting, and number one leader in real world asset tokenization. Carlos, thank you for being here.
Thank you. I think the 600 million was before the 400 million from BlackRock.
Yeah, we're going to get to that part too.
Might be at a million.
Yeah, we're over that part now. Yeah, so BlackRock has come in a big way, and we're going to get there. But let's back up for a second, because listen, you know, first of all, I have some accomplishments down here, and I've just grabbed a couple so the room can understand what you've done. Launched in what, late 2017?
Yeah, we incorporated in November 2017 the company. We kind of announced to the public in January 2018 at the North American Bitcoin Conference in Miami, which used to be like the premier crypto conference back in the days.
Yes, absolutely. And in March 2021, Securitize issued the first credit-rated security token in Japan. Can you talk about that?
Yeah, so we actually have a big presence in Japan, and we've done a lot of interesting projects. Obviously here, not all of those projects get publicized here, but just personally myself, I lived in Japan many years, and I work there and I speak the language, so I actually raise money from most of the large Japanese financial institutions. We have NUG, which is the largest bank, Sumitomo Mitsui Trust Bank, the largest trust bank, Mitsui also larger real estate business, many companies. And then, you know, we have been with the largest organization platform there, even though we're not a regulated entity, we just act as a technology provider. And we've done a lot of the pioneer work in tokenization in Japan, including this project you mentioned.
And then late that year, in December 2021, the first tokenized S&P index fund launched on Securitize markets.
Yeah, so in 2021, we were approached by Standard & Poor's because they had done crypto indices, and they wanted to create a tokenized fund that basically replicates the indices. So that was another of the first, interesting tokenized funds that we did back in the days.
In July 20, and by the way, I'm skipping over a lot of great achievements and accomplishments you guys have done, just grabbed a few, but July 2023, coming closer to current time, Securitize began issuance of tokenized securities in Europe in an advanced EU-wide license, or wide license.
Yeah, so since we're in DC and talk about policy, in the US, there's primarily focus on two things in the crypto space to regulate them. One is stable coins, and the other one is the T21 for the crypto market structure. In Europe, they actually have a third one, which doesn't exist here, which is about tokenization itself. And for the most part, tokenization means, you know, issuing securities on chain, because you, at the end of the day, securitize an asset or tokenize an existing security. And they have done a very comprehensive regulation called EU DLT pilot regime that allows you to basically use a public blockchain as a way to represent and trade securities in a legal way. Without intermediaries. You don't need to use Central Securities Depositories, the DTCs of Europe. You can basically not use them and sell the trades on chain, and we're applying to the license. Nobody has got it yet, so fingers crossed we may still be the first one. But we've been the first one actually issuing securities under a sandbox environment that is a prerequisite to get the license. So.
It's remarkable what you've done in this amount of time with the headwinds.
It's been a long time.
Oh, well, it feels even longer because it's crypto, right? Yeah. What? I mean, how did you, first of all, I mean, a lot of people tried to do this, and we just talked before we're sitting here, like in 2018, there was a whole different field of players out here than there are today. What about this space made you think this is where we want to go with Securitize?
So look, my background is technology. I have a PhD in computer science, and I've always been dealing with technology. I think the last 6 years I've done an accelerated master course on capital markets and regulations, which has been very interesting, by the way. So my approach was purely technological, right? So I saw a new technology that allows you to basically record and transfer ownership, a new ledger technology, in a very efficient way. And then I saw how people were using that ledger technology back in the days with the ICOs to basically allow very simple, frictionless participation in projects, as well as provide liquidity for those, economic interests on those projects, which essentially was what the ICOs were doing. So my naive way was thinking, why not apply this to all these other illiquid, high friction investment opportunities out there, like, alternative assets, private credit, private equity, VC, etc., without knowing that there was a whole of, regulatory barriers to making it happen. But that's how we started in the industry, and as you said, 2018, everybody was very excited about tokenization. We were one of the companies there. At that time, we were probably not the most known company like we are today, I would say. There were other companies that were much better funded, that they had raised a lot more money, that they had big backers like A16Z or big VCs that were backing some of the players there. And then it didn't happen. And I think it didn't happen for a variety of reasons. One is obviously the players back there, like ourselves, we didn't have any licenses, right? So we were not regulated, and then to convince, the KKRs, the BlackRocks of the world to move into the space, you have to convince them also that this is legal, right? That there is a regulatory framework for how you are using this technology to issue, trade, and serve securities. So that was not there. The technology itself, blockchain, was very, very rough. It was, very difficult to do key management and wallet management, and the UIs were very non-user friendly, etc. So those things have improved significantly. And I think the third thing is that the crypto industry just went in a completely different direction, right? While now it seems to be like a consensus within the crypto industry that what they call real-world assets, it's one of the best use cases for this technology, and probably one of the biggest ones that people can focus on.
Now, we know you've got some big BlackRock news, and we're going to get to that in a minute here, but you're a #1 leader in real-world asset tokenization. This is where the world is going. You've cut through to be at the front of the line. Can you just speak to what you set up for companies that need to tokenize? Because there's the investor that can participate in the platform, and then there's the companies that can come to you because they want to tokenize securities. Can you talk about it from that side?
Yeah, so it's a two-sided marketplace, as you said, right? So
Yeah.
you have on one side the issuers, which are the owners of assets that they want to digitize them if you want, make them more productive, put them on chain, be able to interact with other things, etc. And then there's the investors that come there. So we do have kind of like two licenses if you want. We have a transfer agent license, which is a registered transfer agent that allow us to basically work with an issuer, like BlackRock in this case, and issue their securities on chain and manage them on chain, keep track of beneficial ownership, do things like, enforce compliance, do redemptions, move securities in an efficient way, etc. And then we have a broker dealer and ATS, which are investor facing if you want, that allow us to sell and trade those securities against an institutional or an individual investor. So
That is remarkable. I don't know what to say. It's remarkable to accomplish that. It is a huge accomplishment to do that. So now let's talk about the big news, which is BlackRock. Tell everybody what's going on with BlackRock and Securitize.
So around a year ago, Larry Fink, who's the founder and CEO of BlackRock, started being very vocal on TV, in CNBC, and on this, finance programs, talking about how they were doing the Bitcoin ETF. That's one of the big things they're doing, super successful launch. And then the other thing, it was tokenization. He was very vocal about how, he believed the future of asset management was tokenization, because you could then, kind of digitize the securities and allow for better distribution, better asset servicing, reduce cost, to do new things, etc. So he was talking about it, but he hadn't done anything. Just go ahead.
No, why now though? Why is this happening now? Do you feel you're getting the response for it's not just BlackRock, by the way, right? You're having all of these
Yeah.
companies come to you now. Why is it now, even though we have the current lay of the land with the regulation the way it isn't?
I don't know. I don't know why BlackRock has come now. Not before. We've met the team back in 2019 when they were already kind of exploring the space. I think, as I mentioned, I think now people feel more comfortable with the blockchain industry as a whole and crypto and tokens and things like that. There's certainly more regulatory clarity for regulated entities like us that do securities. There's also all the stuff that didn't exist before, like stable coins. Like when I started, stable coins were not a thing. I don't know if they existed or not. They were certainly very, very small and not being used by anybody, not as scaled like now. So I think there is a confluence of the industry being more mature, and as the industry gets mature, then the largest players start coming into the industry. Right? All industries start with the early adopters, which are not necessarily the incumbents of the industry, right? And as the industries get mature, then the incumbents, like in this case BlackRock or others, that's when they come, right? So I think that's the one now. So
Well, it's a huge seal of approval for you to get that kind of a nod from a large entity like BlackRock, so congratulations to you. Looking at the state of crypto today, that's a loaded question. How do you feel about it? I mean, I know you've got great news with BlackRock, but how do you feel about it looking forward? Like, how far away does all of this look until we see all the markets change completely like Securitize?
So the first asset manager we brought in was actually KKR, and that was in 2022. And at that time, I thought, this is happening now.
Yeah.
All the asset managers, because we got phone calls from, I don't know, 20, 30 different of the largest asset managers interested in tokenization. And then the crypto industry went into a major disarray. BlockFi, Celsius, FTX, Voyager, they were, bankruptcy after bankruptcy, fraud after fraud, etc. And it kind of reminded me to 2018, because 2018 was the same. Like we went from 2017, super exciting about the industry, and then all the fraud with the ICOs and all that stuff. So I think, and then at that time, all these players, they kind of pull out because of the reputational impact. You have to think that whatever happens in crypto is great, but it doesn't really move the needle yet for a BlackRock, right? So even something like the tokenized fund we're doing with them, or the Bitcoin ETF is adding let's say a few $1 billion in AUM for a company that manages $10 trillion. So they certainly don't do it because of the short-term impact. They do it because of the long-term impact that this has for their business. They want to be there, they want to learn, etc. So, but if that comes alongside, negative connotation because you're in the same article saying this guy is going to jail because he stole $1 billion and you're tokenizing this, you don't want that. So 2023 was not a very good year because a lot of these companies basically pull out of the space because of the concern about how poorly run was the crypto industry. And I think the crypto people blame the regulators. I think that you should blame yourself for having been part of it, because everybody was involved with one way or another with these companies. That in some cases they were clearly doing illegal stuff, right? Like Celsius or BlockFi, they both were sued by the SEC. BlockFi paid $100 million by the SEC. You don't pay $100 million if you think you're not doing something illegal. Because some other companies are now fighting the lawsuits because they don't think they're doing something illegal. When you pay, especially that figure, you are admitting that you were conducting fraud, right? So the fact that people let those things happen gave a really bad reputation for the industry. Now where we are today, I think is much better, right? Because whoever needs to be in jail is in jail. Whoever needs to pay a fine has paid a fine and move on. Whoever went bankrupt, and is not committing fraud anymore because they're not around. So there's been a massive cleanup of the industry. And at the same time, then we got the Bitcoin ETF, which brought some legitimacy to the industry as a Web2 wrapper into a Web3 asset to bring it to TradFi. And then now you have the opposite happening, which companies like BlackRock taking TradFi assets and bringing it to the Web3 world through tokenization, right? So we're in a very good shape, but because this is crypto, I'm always concerned, because there's always somebody that's going to find some shenanigans to do that can actually derail it again for another 2 or 3 years. So hopefully most of the crypto participants today are going to be a bit more responsible towards what they do and not take shortcuts to make money that end up having a super negative impact to the industry that delays the adoption for a few years. So.
Looking ahead from where you're at right now, and obviously you've had some major accomplishments, and the wins are certainly in your sails, and I love that for you guys. What are the hurdles you see in front of you, if not the entire space right now where we sit today in crypto?
So, yeah, I think we've made a lot of progress, but I think we're just scratching the surface, right? So as you said at the beginning, what you had on the blog is probably from our website from like a couple of months ago, where we were estimating that the amount of tokenized assets that have been issued with our platform was around $600 million. Within the last couple of months since we launched BlackRock, we added 400 million. So we almost doubled in 2 months what took us 6 years to do. So, and if you think about the amount of tokenized assets out there, it's tiny. It's very, very small because, potentially you have, 40, 50, $100 trillion of assets out there that could be put on chain, right? And of course, not all of them will put on chain the same way that, when color TV came, not everybody throw away their black and white TVs and continue consuming black and white TV, right? So, but if you think about the size, it's very small. Like the entire tokenized treasury market is like 1.2 billion. The entire, tokenized credit market is like 800 million. The rest, if you aggregate, is probably another billion or something like that. So you're talking about like 2 to 3 billion.
Looking at the
It's
stable,
nothing.
yeah, it's nothing compared to where we're going, right? But looking at the current legislation that's out here today, is there anything that you really think is favorable for the whole industry as well as Securitize that's gonna unlock the door? Like, is there a stable coin bill? Because a lot of people don't, probably not in this room, but a lot of people looking at this space don't understand that the stablecoin bill isn't just about pegging dollars to dollars. Those stablecoin bills are in fact tokenization bills, and I would imagine that's going to play
Correct.
hugely to your favor, Securitize.
So actually, stable coins, you can argue, is the first, really successful use case for tokenization, because they're tokenizing dollars, right?
Yes.
We give you a token that represents a dollar, the same way that now we're giving you a token that represents a unit in a money market fund. That's what they were doing with dollars, right? So it's probably arguably the most successful use case so far. I would say Treasury's been the second one. And then the fact that this is stablecoin bill, depending which version comes out, will be more positive or less positive, is great. And I think that the next thing that hopefully Congress will focus on is tokenization, right? Because tokenization, there's still gaps in the interpretation of how we do things. We try to always follow existing securities regulations, but securities regulations are not designed for certain things we do on blockchain. So there are these gaps that, as we mentioned at the beginning, they're being covered in other jurisdictions like Europe that are not being covered in the US as well. I think for us the most, if you want, negative part of the environment is the association with the rest of the crypto industry. As everybody knows, and this is not a secret, the SEC is becoming very belligerent with a lot of the crypto players, and because we use the same underlying technology and the same ecosystem, we end up being like thrown into the same bucket, and things that we should be able to do very quickly and get approvals very quickly, because if you're a normal broker dealer, you will get it very quickly because we use this new ledger technology called public blockchains. It takes forever to get it approved, and I think it's very unfair. And I wish that the SEC and the regulators will clearly distinguish between what we do, which is regulated with regulated entities, etc., versus what the other people do in the crypto space with digital assets that there might be some different interpretations about the legality of what they do there or not. I'm not going to get into that debate, but it's certainly completely different.
Right. Do you feel that, well, and you don't have to speak to it if you don't want to, but do you feel that it's legislation that fixes that? Or do you think there needs to be a whole nother agency to address those issues? What do you
I don't think you need another agency in
Thank
our
goodness.
case, because what we do are
Thank
securities, and there's one already, which is called SEC.
Yeah.
So I don't think another agency, I think anybody works for agencies.
No, I
probably.
don't, yeah. Thank you for the answer.
That's a rule of thumb.
Yeah.
I also don't think that necessarily you will need legislation if the SEC would actually move faster and cover the gaps, but if they're not doing it, I think Congress should step in and fill the gaps.
That's wonderful. Any final words you want to share with them about security?
No, just first thank you for the Chamber of Digital Commerce for the invitation. I think it's a very exciting time for us. You said we've accomplished a lot in a very short period of time, but it feels like a long period of time because we launched the company in 2018. It's taken 6 years to get here. And I think we're at this point that it really feels like an inflection point of the industry, that where we're going to go from hundreds of millions and billions of dollars to finally cross the $1 trillion mark. I always say the moment that the tokenization industry crosses that, size, then it's becoming really relevant for everybody, and then it's here to stay.
So well said. Overnight success takes about 6 years. Carlos Domingo, thank you, man.
Thank you.
go. We probably have a few minutes before the next session. Can you guys take a couple of questions?
Yeah,
Anyone?
sure.
Any questions?
I was looking at how, we were both looking at how Securitize tokenizes some digital assets. And when you start moving derivatives around between institutions, I would think that there needs to be a privacy aspect attributed to the movement of those tokenized derivatives. Is Securitize privatizing any of these transactions in any way?
So the blockchain is pseudo-anonymous, right? So today, if you go to Etherscan and you look at the address of let's say the BlackRock token that we issue, the little token, it's called, you're not going to see who actually owns it, right? But you're going to see a transaction. There's been like, I think 120 transactions since we launched the fund. So obviously that becomes visible. It doesn't necessarily tell you who it is. There is a lot of, so we are an application provider on top of a blockchain, right? So we issue contracts, we write, blockchain code and stuff like that, but we don't actually develop let's say the blockchain technology itself. I think this company is working on anonymizing transactions on the blockchain to prevent the issues that you're mentioning, that some financial institutions, they might not want that the transactions are semi-visible, if you want. I mean, the transaction itself is visible. What is not visible is who is behind the transaction. So there's other companies working on that. If that becomes a need, we certainly are willing to adopt it, but so far that has not prevented people from tokenizing assets. And by the way, for the regulators, actually, the fact that this becomes a bit more transparent should be welcome, right? Because private markets, yeah, and for regulators, because regulators don't have no clue what happens in private markets. They have no idea. You file a Reg D saying you've raised $50 million, we just don't know anything. Is it true? Is it not true? Who gave you the money? The regulators have no clue.
Yeah, but the whole aspect of having this data on the blockchain for anybody to data mine creates data shouldn't be free, in my opinion. So once you start mining,
free and visible are two different concepts, right?
so you create a great user case for coinalysis, but for for the average user that doesn't want their information on the public blockchain.
Well, nobody knows their information, right? It's information because you don't know.
It's pseudo-anonymous.
Pseudo-anonymous, right? So you don't know who the wallet owner is, right?
So if by any reason the transaction the address gets doxed.
Yeah, this gets dogs, obviously, you say it, right? But
Then,
that can happen also in traditional finance, right? That people find out who is the trader behind a trade and it gets published and bad James.
We have one more over there and a couple more.
Yeah, sure. Perfect.
Yeah, just to follow up on his question, do you have any plans to integrate any type of zero knowledge change into Securitize to make the trades completely anonymous?
We could use it. We have not prioritized doing that because it hasn't been a demand from our current customers.
Okay.
One more over here, and I think we'll call it.
Sure.
Let you guys go.
The success of the Bitcoin ETFs show that a lot of investors want to hold digital assets in the traditional TradFi infrastructure. What kind of linkages are there between the products that you're bringing to market and the TradFi infrastructure?
Great question.
So there's two completely separate use cases for tokenization, right? One of them is to take a TradFi asset, like let's say a money market fund, which any TradFi trader can actually buy it, but you bring it on chain for the crypto people, which the crypto people want to be on chain, right? For a variety of reasons, because they want to have their assets there, because they don't have bank accounts, or because they want to be able to move money in and out at a crypto speed, not at TradFi speed, and be able to have 24/7 settlement and stuff like that. So that's one use case. The other use case is actually the opposite, which is what we were doing, let's say, with Hamilton or KKR. Tokenization is also a very efficient way of providing much more efficient fractional ownership for an asset, because you basically digitize and allow you to manage more investors, issue securities more efficiently, track changes of ownership in a more efficient way, potentially providing some more liquidity, etc. Which the beneficial of that is not necessarily the crypto user, but it's actually a TradFi individual investor that doesn't have access to those assets, which are designed for institutions, right? Now the issue there is that then you have the friction of the token, right? The wallets, all that stuff. I think that, we're working with companies like Fireblocks, etc., to try to kind of hide as much as possible that underlying complexity, which 6 years ago when I started was impossible. Today, we're getting there. So a TradFi user just opens a brokerage account and can actually access those products and get all those benefits without necessarily having to themselves having to have their own wallets or going and purchasing USDC somewhere and stuff like that. We're not there yet, but we're trending towards that.
I know she's gonna ask, yeah, I think one more question.
One more and then we'll wrap it. Yeah.
And before she asks, I just wanna ask too, tokenized real estate, like, when we can see that?
That's a good question. These days, in real estate, it's not a very popular asset overall, right?
I know, right?
So we prioritize tokenizing things that people want to do, right? Not because the underlying asset class, they're all tokenizable.
Right.
You can tokenize anything you want, right?
Yeah.
Any security. So, but I think real estate today doesn't sell very well, right? So
Not yet. Yeah.
I think it's the
It's in a down market.
In a high interest rate environment, you want to focus on money market funds, treasuries, private credit, things like that are
So it'll
more,
come, but
more
not
okay.
now.
When interest rates go down,
Down.
real estate will go up.
Well, Bradley, thanks so much for letting me ask the last question. Carlos, I loved your interview with Laura Shin on Unchained.
Thank you.
And you had talked about why Securitize chose to build on an open, public, permissionless blockchain versus a private permission one. I would like to know what your parties are on, say, rehypothecation down the road of these tokenized assets and how you can bridge with the financial institutions who are forced to only work on private permission networks.
So that's a good question. I don't know rehypothecation, but certainly lending against those assets, which I guess is where you're going. On a tokenized asset, it's easier to borrow or lend against it, right? Because the majority of the times that you have an asset and you want to borrow against it, there's a number of issues. One is provenance of the asset. Or do you actually own the asset? How you prove you're the owner, etc. With the token model, it's a ledger that tells you this guy owns this, right? So that's problem is solved. The second problem is how do you lock the collateral so it doesn't move, you don't rehypothecate it and maybe borrow twice against the same collateral. And that against the token model solves for that because you can move it into a smart contract, it's locked there, you can't do two things with the same token. And the third one is in case of when you repay the loan or we defaulted the loan, how do you move the collateral, right? And that again, that you can automate it with smart contracts and move it to a different wallet and stuff like that. So we're very bullish on lending. We have started looking at that for our assets because I think that is one of the use cases of, because tokenization for just having a better ledger is nice, but it's not that interesting. I think the interesting thing is when a tokenized security has better utility or better functionality than a non-tokenized security. Some asset managers out there, having an app that tells you, oh, we've tokenized you, this is your wallet address, thank you very much. I don't know what you get out of it except somebody in the innovation department getting a promotion. But if you want to do things that have real business usage, you have to prove that tokenization adds more value beyond just the underlying ledger technology. So.
All right, well, let's give one more round of applause